Welcome back, accounting boffins. You're with Ashraf Patel. We're dealing with asset disposal, and this obviously has now become our favorite section. We're not scared of the section anymore because we know exactly how to go about dealing with an asset disposal. Remember, again, a recap, when you are dealing with asset disposal, important considerations. One, the method of depreciation. Are we using the cost price method, right, of depreciation, or are we using the diminishing balance method of depreciation? Remember the two methods of depreciation. Most important, no matter which method you are using, we always use art. What do we mean by art? By art we mean the amount of the calculation, the rate of depreciation, and thirdly, the time component. How many months are we calculating the depreciation for? And then finally, when it comes to the asset disposal itself, what do we take into consideration? We always remember, with asset disposal, what components would you be working with regards to asset disposal? You'll work out the current depreciation. That means for the current financial year, your cost price, your accumulated depreciation, your carrying value, your selling price, your profit or your loss on sale of asset. What else do we remember? That if my selling price is greater than my carrying value, I'm going to make a profit. If my selling price is less than my carrying value, I'm going to make a loss. And if my selling price is equal to my carrying value, obviously no profit or no loss. Right, let's look at the next question, an interesting question. It says here, consider the information provided. Explain whether or not Barry and Brenda should be concerned about any problem or aspect relating to each taxi. Focus on one major problem per taxi. Quote amounts to support your opinion and provide a valid solution to each problem. Okay, what do we have here? Let's look at taxi number 1, right? The name of the driver is James. The date purchased was the 1st of March 2012, clearly telling you that it is something that you need to take cognizance of. The date, watch, right? The cost price of the vehicle was 52,000. Its accumulated depreciation is 51,999 Rand. Again, look at the data that you have, and you can clearly see here that this is an old taxi. Well, how do we know that? Because the accumulated depreciation is already 51,999 Rand, meaning that it has a carrying value of 1 Rand. And you do remember how to do the calculation when you have an asset valued at, or an old asset where you have to arrive at a carrying value of 1 Rand. Okay. Amount of revenue brought in, kilometers covered, fuel and repair cost, and the fuel and repair cost per kilometer. Okay. Let's look at our possible challenges or problems. Number 1, this vehicle is certainly overused. Why do we make that statement? It's high kilometers in relation to the other taxis. Watch here. It's 120,000. Again, we're quoting figures based on the information. There's 120,000 in relation to 70,000 and 34,000. So clearly you can see that in relation to the others, it's definitely overused. Number 2, it's an old vehicle, it's fully depreciated. Again, the cost price 52,000, accumulated depreciation 51. Here we go. There we see, we mentioned that already in our introduction. So clearly we can see that it's definitely an old vehicle. Then it has high running cost. 6.10 Rand per kilometer compared to 4.80 and 4.70. Again, looking at this here, 4.80 for taxi 2, 4.70 for taxi 3, 6.10 per kilometer. So obviously, the cost per kilometer is much higher than the other two taxis. What action do we take? Number one, obviously, you have to replace the vehicle. Number two, use it less often and identify why this vehicle accounts for the most kilometers. Clearly, an indication to you that this vehicle is being overused. It's the oldest vehicle in our fleet, yet it covers the most number of kilometers, and obviously it's time to now replace that particular vehicle. Okay, that's taxi A done and dusted. Let's look at taxi B. If you know, sorry, taxi 2, not taxi B, this one was taxi 1, taxi 2. It was bought on the 1st of March 2018. Driver is Bongi. The cost price of the vehicle, accumulated depreciation, amount of revenue brought in was 288,000. Kilometers covered was 70,000, right? The fuel and repair cost was 336,000, and the fuel and repair cost per kilometer was 480. Okay, let's do a calculation here. If I take my revenue per for taxi 1, I'm going back to taxi 1, and I'm saying, what's my revenue per kilometer? What am I going to do? I take my revenue of 1,080,000, right? 1,080,000, if I got it right. 1,080,000 divided by the number of kilometers covered is 120,000, and this will give me a figure of 9 Rand. Let me put it down here, right? Let's do this for taxi 2. In taxi 2, we now have revenue of 288,000, 288,000 divided by number of kilometers covered was 70,000. And this gave me a revenue per kilometer of 4.11 Rand, okay? And what we're going to do here now is put this figure here, 4.11 Rand. Okay, that's taxi 2. While we're at it, let's do taxi 3. Taxi 3 has a revenue of 306,000 in total, divided by 34,000 kilometers that we've covered to give me a revenue again of 9 Rand. So therefore, you can see here, we've got a figure here of 9 Rand once again. Clearly a discrepancy, right? Taxi 1 and taxi 3, both of them have a revenue per kilometer of 9 Rand, whereas taxi 2 has a revenue per kilometer of 4.11 Rand. Okay, what is it that we are concerned about? Taxi 2, your revenue is too low. 4 Rand per kilometer in relation to 9 Rand per kilometer of the other taxis, right? So clearly something is not adding up. If the other two taxis are giving you a revenue per kilometer of 9 Rand, and we've established that, we've ascertained that from the figures given to us, whereas taxi 2, we're only getting a revenue of 4.11 Rand per kilometer. Surely there is a possibility of fraud, right? The drivers not passing on the revenue to us. Clearly, there's something that action needs to be taken. What action? Number one, do an internal audit. Remember, the idea of internal auditing is to ensure that all our control processes are in place and they are effective. That's important. Number two, there may be a possibility of a criminal investigation, right? Very often, candidates would say, fire the driver. It's not as easy as that. Obviously, you need to follow due process with regards to, one, you have a disciplinary hearing and a possible dismissal. So in other words, you've got to give them a fair chance to present the case It's possible there may not be fraud, but in this case, obviously, it's pointing towards fraud. So therefore, what happens is you first institute a disciplinary hearing, obviously, pending the outcome of the disciplinary hearing. If there was definitely fraud involved, then definitely you could have a possible dismissal. So with taxi 2, clearly we had a challenge. Right, let's go to taxi 3 now. With taxi 3, again, we've got the cost price, we've got the accumulated depreciation, amount of revenue brought in is 306,000. Clearly, this stands out very, very evident. What is it? Look at the number of kilometers that this taxi has covered in relation to the old one, 120,000. In relation to taxi B, 70,000. We've only covered 34,000 kilometers. Clearly a cause for concern. Right, so taxi 3, what's our challenge? Clearly it is underutilized, low kilometers. We've only covered 34,000 kilometers compared to the 70,000 and the 120,000. Again, your running costs are low, right? 470 per kilometer compared to 480 and 610. What action must be taken? So obviously, if this vehicle has the lowest running cost, that's the vehicle that we need to use the most, because obviously it's going to give us the greatest return. So therefore, this vehicle must be used more often. Identify why this vehicle is underutilized. It's a possibility that the driver may be a lazy person, or the driver may not be getting the orders for the relevant trips to be undertaken. So this means that the orders may not be passed on to the driver. It may not necessarily be a lazy driver. So in other words, what are we saying here? You can clearly see the question relates to fixed assets and the utilization of the fixed asset. So one is where we do a question based on the calculations, and this type of question is an interpretive type of question where you are given information and you have to identify areas of concern. Okay guys, so with regards to fixed assets, if we have to summarize it, what is it that you need to know? Number one, be able to calculate depreciation on both the cost price and the accumulated depreciation method, right? One you use the cost, the other you use the carrying value. How do we determine carrying value? Cost price minus accumulated depreciation will give me my carrying value. Number two, be able to do an asset disposal, the account, the table, or the note number 3. What are the 5 steps that we do? Current year's depreciation, the cost price, accumulated depreciation, your carrying value, and your selling price, which will then give you either a profit or loss on sale of asset. Make sure that you understand how to use note number 3, and therefore understand that note number 3 fits in to your balance sheet. But note number 3 is always a note that, like we mentioned when we just started asset disposal, it's a note that learners have a challenge with. But now, once we've explained it, I'm sure it's a piece of cake, chocolate cake. From me, Ashraf, and the team, we want you to practice on asset disposal and all questions related to fixed assets, because as you practice, you'll begin to enjoy it, and when you enjoy doing something, definitely you're going to ace it. You're going to be an accounting shining star. Until the next time, be good. Goodbye.